So welcome, it's King Dubi, owner, founder of Lookings Academy. So everything you're going to learn in this course is going to help you grow from being a beginner to an advanced, profitable forex trader. Okay, so let's get right into it. So in the introduction, so I'm going to be teaching you on trading. All right, the word trading. So I'm going to start from there. What is trading? Trading is just basically buying and selling of goods and services. Okay, so whereby people buy something at a lower price and tend to sell it more expensive. Okay, that's just the idea of trading. Anything can be traded, goods, services, whatever. Okay, that is the idea of trading. So in financial markets, trading involves a lot of different assets. Okay, so the financial markets is large. We have the stocks, we have the index, we have the cryptocurrencies, we have Forex, which is the largest market in the world. Okay, then we have bonds, we have commodities, we have a lot of markets. Okay, so how does trading relate to these financial markets? So I'm going to go first with stocks. So we define trading as the buying and selling of anything, goods and services, whatever, but whereby something is bought for a lower price and sold at a higher price. Okay, so we will bring this definition into stocks. This is the idea of just selling company shares. Okay, so there are so many companies that have their ownership open to the public. Okay, they are called public limited liability companies. Okay, and I'll give you examples of some US companies that sell their ownership to the public. Apple is one of them, McDonald's is one of them, Zoom is one of them, Snapchat is one of them, Tesla is one of them. Okay, so they are owned by a lot of people. These businesses exist as public entities. Okay, they run on their own, but a lot of people have their money invested in both people that know how the business runs and people that know how the business runs. Those are the public that puts in money, just putting money to get a return. They don't really know how the business is run day to day, and the business can exist on its own. So these company shares are being sold online on the stock exchange market of that country where the company generated from. Okay, so I'm in Nigeria and we have the Nigerian stock exchange market that contains companies like Dangote Group, MTN, and etc. Okay, so talking about the financial market like Forex is the biggest financial market. So what is being traded in Forex is currencies. Okay, currencies are being traded in Forex. And how are these currencies traded? This is whereby somebody or an institution buys low and sells high. As easy as that. Okay, so that's basically what trading Forex means, whereby you buy currencies and sell it. That's just it. So that's like the dummy definition of Forex. So now let's take Forex a step higher. There is a transaction between, you can have a transaction between yourself and one person. That is Forex, foreign exchange. What I'm saying is you can sell currency or buy currency from just one person. Let's say you travel to a new place, a new country, a new city, they have a different currency, and then you have the different currency from your own country, and you want to exchange your currency with theirs, just so that you can be able to purchase things around the city or in the country. So that's going to be Forex, foreign exchange. That's Forex too, but between two people, right? Now, what we are going to be pondering over in this course is the one whereby exchanging currencies with a large number of people around the world. Okay, so that networking, that market of exchanging currency, buying and selling currency around a large number of people around the world is the Forex market. Okay, that's whole markets of buying and selling of currency, okay, around the world is the Forex market, and this is done online via the internet with the help of some people called the brokers. Okay, so we have another market like the commodities market. You know, the commodities market here is commodities, like you sell stuff like gold, silver, oil, the rest of them. These are commodities. This is commodity market. These are the things sold, bought and sold in it. All right. So we're going to dive deeper into the world's largest market that have the most trillions of dollars circulating per day. What is Forex trading? I was explaining Forex trading when I was talking about trading assets. Okay. Now I'm going to dive deeper into Forex trading. Forex trading is the buying and selling of currency between either two people or one person and a large number of people around the world. Okay, so you might be asking yourself, how can you be doing this with a large number of people around the world? This is going to be done through the help of a company or a group of people I'm going to mention later in this video. But basically, foreign exchange is the acronym for Forex. Forex is the acronym for foreign exchange, whatever, vice versa. So it's just basically buying and selling of currencies. It is what it is, just that. So who are the people involved in this currency, in this forex market? Who are the participants? Who would do it? Okay, so the number one is physical, between two people, exchange of currencies physically. You know, when you go to a new country, I'm talking about that one. That one is bygone. So let's focus on what we're going to learn in this course. Is you exchanging this currency with a large number of people for profit making purposes. Okay, so you and I are actually called retail traders. If you trade in the forex market, if you're a participant and you're an individual, you're going to be called a retail trader. Okay, and other people involved in this is the hedge funds. This is like a very large financial institution with billions and trillions of dollars. How do they have this capital to do business? Is that the elites, rich people, very rich people, have their money invested in these hedge funds, and this hedge fund give them yearly return, and this hedge fund trade the forex markets with different kind of strategies. Okay, so they have this in capital. It's just normal. Like, imagine this, a large number of people are investing in your small business, and you have a lot of capital to do your business. The same thing. That's the same thing with hedge fund. Okay, so the hedge fund give them returns yearly. That's hedge fund, right? So another set of people that involved are the banks. What banks? Commercial banks. Not just any bank, but the central banks of most countries regulate the currency flow in the country, regulate the economy in the country. So they participate because they fluctuate the pricing of the currency because of investors, people coming to do business inside the country, and different reasons. Okay, but just knowing that the hedge funds, the bank, you and I are participants in the forex market. These are the kind of people that are involved in the forex market. The idea of leverage in forex. So when you talk about leverage, understand this: that leverage is something, I don't know, some of you that learned lever in physics, the word lever, leverage, so they're related, whereby you put in a certain amount of work and you get an output. Okay, so leverage in finance is usually you putting or getting help, an easier way to do something. Because yes, lever is a machine when we're taught in physics, what I'm saying, whereby you can put in a certain amount of inputs to get a certain amount of output. So now imagine this: if the input is higher, the output will be higher, right? So in finance, this is the idea of putting a lot of either workforce or capital to get a very good output in business. Okay, so let's talk about the idea of leverage in forex. Now, the forex market involves a lot of institutions, rich people. Normally, you and I do not have the amount of trillions and billions of dollars to invest in the forex market. So there are some people called the brokers. What I'm saying, they are like the middlemen that help us. So when we are putting our normal $1,000 in as capital, we are using it as capital to trade forex. There are people that help increase this money, make it worth getting involved in the market. It's just like so that's basically it. These people help you get involved in the forex market. Like, they kind of increase the amount of money and the amount of access you have to the forex market. Okay, so they are the brokers. So these are the people that enable we individuals to be participants of the market, because initially we were not participants, but when the internet was invented, we were given the access by brokers. So we can sit in our house, use a small capital, and access a very huge market like forex and participate in it. So it's just like this: somebody granting you loan to start a business. You don't have enough capital, and that business is very capital intensive, and there are people that are there available that want to grant you loan, but then you give them some interest. So that's the same thing that the brokers kind of do, right? So what's the advantage of forex over other financial markets? So like the stocks market is not open 24 hours. Okay, there is market opening time for every country. Like, I think most countries is 7 a.m. in their time. So like, I'm in Nigeria, and 7 a.m. I think the Nigerian stock exchange market should be open. In America, I think that's the same time. The America is around 9:30, I guess. right? 9:30 a.m. That's when the American US stock exchange opens. You know what I'm saying? So it's not round the clock, and then it closes a certain time too. But in Forex is open 24 hours, round the clock, 5 days. Monday, Tuesday, Wednesday, Thursday, Friday. Yeah, that's when it's open. So second idea is the idea of leverage, whereby if you're trading stocks, you will need some amount of money. But in Forex, you can even start with as low as $100, $50. Some brokers even let you start with $10. It's that easy. Right, so the first step to forex trading, before you become a forex trader, you must understand the market participants, understand a lot of things about the forex market, understand the time, the best time to trade, etc. Understand how it works. Okay, understanding basically how it works, and then the next step is creating a strategy, creating a way or a particular way you are going to. It's just like a usual business. So, like, let's say you are starting a small business, and you must understand your suppliers. Okay, the people involved in your niche, the people that you get it from, the manufacturers, the suppliers of your goods, your target audience, your potential customers. You must know all these kind of people in the niche you are in. That's normal business, right? In Forex, before you get started, you must know the people involved in the Forex market, which you have just learned in the introduction. So you have found out that the hedge funds are involved in the market, the banks are involved in the market, you understand who brokers are and everything. And then the next thing is you create a strategy, just like every other business. You must create how you want to be able to be better than your competitors in that niche. You discovered your niche, discovered people involved in it. The next is you create a detailed plan on how you want to make your products different, make your products better, your mode of service, everything, your packaging and the rest. In Forex, it's the same thing. Forex is just a usual business. Okay, you are going to create a strategy, a particular way you're going to, use consistently, that would make you money off the market every single time. Then when you learn about that, learning that strategy is going to involve you knowing the different time sessions in Forex, the different tools to use and everything, how to analyze the market, how to know what you need. Right. The next one is getting a broker account. So this thing I've been saying is about I've been saying about this in brokers. These are the people, the middlemen that enable us have access to these markets. Okay, the brokers are companies. So if you're trying to get into Forex, these are the first people you're going to create an account with. If not, you don't have access to the Forex market. All right. So you're going to open an account with a broker, and what it takes is you have to create a normal account with your email password, and then you are going to verify your identity and everything for security purposes. Okay. All right. Best sessions for trading. So of course, many countries are involved in the forex market because it involves the currency of many countries. Okay. So basically, this is it. Every country has a banking hour. Right? Banking hours. Better put. Every country has banking hours. So the banking hours of the major countries like USA, United Kingdom, and Asia. Okay, the banking hours of these big countries are the best time to trade forex. Okay, so what you should do is you should go and check the timing, when it's 7 or 8 a.m. That better put 8 a.m. When it's 8 a.m. American time, Eastern time, like New York, you know what I'm saying? Check when is that time in your current country time zone. If you're in Nigeria, that's around 12 p.m. or 1 p.m. Depends on the daylight saving. Alright, so that's the best time to trade because around this time there is an overlap. Okay, the best sessions to trade is when there is an overlap. When this is London banking hour and this is Americans or New York's banking hour. Okay, in the United Kingdom, we talk about London. In America, we talk about New York. These are the major areas because these banking hours, when they overlap, meaning when it's exactly London and New York time, this is when the market is mostly volatile. And if you're in Nigeria, that's mostly from 12 p.m. to around 5 p.m., 4 p.m., around that time. That's when the market is most volatile, because the London banking hours are active, the New York banking hours are also active, so there's an overlap. Okay, another very interesting time to trade the forex market is when the Asian banking hours lap with the London banking hours. Okay, so that Asian and London lap is called the London session, because it's very volatile, because these two is an overlap. Okay, it's very volatile. That's it. Another time that is very popular is the New York session. New York session is when the London banking hours and the New York banking hours overlap. Okay, so these are the best time professional traders are involved in the market. So basically, if you're a Nigerian, I'm going to say it like this: 8 a.m. You know what I'm saying? Or just say yes, 8 a.m. to 5 p.m. in the evening are the most volatile times. Okay, 8 a.m. in the morning till 5 p.m. in the evening are the most volatile times. Now, if you're watching from another country, I'm basically saying 8 a.m. GMT plus 1. So if you're calculating for your own time zone, you can use this 8 a.m. GMT plus 1 till 5 p.m. GMT plus 1 are the most volatile times in the forex market because of the overlaps. So what is pips? So this is a very, very, very popular thing that you might hear from forex traders most of the time. Pips, pips, pips. Pips is an acronym, okay, which is percentage in points. So this is how the prices in the forex market are being measured. So like if there is a move or there is a change in price between USD JPY, okay, or move is going to be from this to this. That difference in figures is called the pip. That little difference. So pips is like is the measurement about how the forex fluctuations are moving. All right. So basically, I would say pips is the name or the measurement given to the little fluctuations in the forex market. It's called pips. Now, what I'm going to use to make you understand better is that if you're measuring a length, you make use of cm, meters. If you're measuring weight, you make use of grams. If you're measuring pips, and if you're measuring the fluctuations in the forex market, whether it has gone higher or lower, is measured in pips. 1 pip, 2 pips. How far did it move? It moved 3 pips. It moved lower. 4 pips. It moved higher. See the charts, how it moves? It moves in pips. The distance from this point to that point is what we call pips in the forex market. Okay, that's the measurement. We're going to be talking about currency pairs. So what are currency pairs? We have said it that currency are bought and sold in the market. So why don't we talk about the things bought and sold? If I was going to be introducing you to a business of selling cars, when I teach you the suppliers, I teach you the customers, I teach you the prices, just like I taught you pips. I teach you the prices. I also teach you about the cars, the type of cars to sell, what kind of cars are best to deal on. Isn't it? The risk factors and everything. So now let's talk about forex. Since we sell and buy currencies, what are the currencies we sell and buy? So they are always written in pairs. Two. Why? If we talk about the lowest level kind of forex trading, whereby it's between two people, it's always between two currencies. If I have pounds and I want to get US dollar, it's involving pounds and US dollar. If I have euro and I want to exchange it with the middleman to get pounds, you getting me? It's maybe I'm coming from Italy and then I'm going to London and I want to exchange my euro for their pounds. It's between two currencies, euro and GBP. Okay, Great British Pound. Or yeah, so all these currencies in forex are always written in 3 letters, and that's the short form. We have euro, we have GBP. GBP is pounds, USD is US dollars, CAD is Canadian dollars, AUD is Australian dollars, LCD is New Zealand dollars. So they are mostly written in 3 letters. So just in case, so they're always paired together, because in forex it's always involved 2 currency pairs. In fact, in anything, it's always involved 2 commodities. Okay, now if I'm selling cars, for me to give somebody a car, The person has to give you money. So there's exchange, right, between car and money. In the forex market, there's an exchange between currency and currency. That's why it's currency pairs. Okay, if you're talking about car business, it's going to be car and money. That's the pair, right? How much is this car? But in the forex market, it's between two currencies, so they're usually paired together. Hope you get it. So just like how we can sell all of that goods, and we have so many different kind of we have different model of cars, different model, different brands. In the forex market, we have different currencies. You know what I'm saying? Like Canadian dollars, Japanese yen, Great British pounds, many of them. There are many of them. So they can be paired in different ways to form what we call major currency pairs, minor currency pairs, and exotic currency pairs. Okay, so if you're talking about major currency pairs, what are major currency pairs? These are currency pairs that involve the US dollar. Okay, so you will see stuff like USD JPY, USD Canadian dollars, GBP USD. So in most cases, the stronger currency comes first for the weaker one. That's why you see stuff like GBP CAD, GBP Swiss franc, USD JPY, USD Canadian, GBP USD, Euro USD. You know what I'm saying? So the expensive one comes first, but there are exceptions like Euro GBP. It's not GBP Euro, it's Euro GBP. Okay, the Euro came first as an exception. All right, so it's mostly the expensive one coming first. Good. So in currency pairs, since these are the things we are trading in the forex market, every currency pair has its own charts or has its own place to be analyzed. Okay, the currency are always paired. We never see euro standing on its own in the forex market. You will never see Canadian standing on its own. They're always matched. So get used to it. They're always matched. This versus this. Because why is it always matched is because between two currency pairs there must be some differences in rates. I can't be involved in the forex market with one currency. I'm saying this over and over again so you don't get confused. I can't be involved in the forex market with one currency. It's not possible. It's always going to be two. If I'm going to exchange currency with anybody, it's going to be my currency and the person's currency. Okay? So if I'm doing any of that, it has to be two. Two all the time. Alright. So now let's talk about the major currency pairs. All of them are called major, involve, you know what I'm saying, involves the USD. The minor ones do not involve USD. The minor currency pairs do not involve USD. They are basically GBP Canadian, GBP CHF, GBP JPY, Euro GBP, Euro Canadian, Euro Australian dollar, and so on. Then we have the exotic currency pairs. This involves the USD and very, very weak pairs. Very weak pairs like USD Nigerian Naira, USD South African Rand, USD and cedis. So many of them, so many of them, Mexican peso, USD, and all of them. All right. So that's about the currency pair. Let's talk about the forex platforms. Platforms are basically the apps that you trade forex. Remember, we are not doing this physically. We are mostly talking about trading forex between you and many people around the world. That's it. As easy as that. Between you and many people around the world. So it's done via the internet and done via platform, different apps, software platforms. All right. So these apps helps you buy and sell currencies. Okay. Now you don't sell and buy the currencies between you. You won't see those people. That's where the middleman comes in, the broker. I've been talking about the broker since the broker. This is where the broker comes in. The broker is the middleman. He takes your orders. So if you are buying Euro USD, there is somebody somewhere that is selling Euro USD. The broker is blocking it. You are not seeing that person. So the broker is the one putting the transaction. So if you're buying Euro US dollar, because it's always in pairs, you can't buy just Euro, you can't buy just dollars. If you are involving yourself in Euro US dollar transaction, you are buying. Somebody somewhere you can't see is selling. That's why you can place the order. So if Euro USD increases in value, then you sell it. When you sell it, somebody somewhere is buying, and then you make profit immediately. You're not waiting for somebody to buy it from you, like the person is waiting, or you're not looking for where to sell it. It's not like cryptocurrency. This is instant. The broker is doing the transactions for you. Instant. So the platform that this whole transaction is carried out is the MetaTrader 5, MetaTrader 4. There are two, MetaTrader 4, MetaTrader 5. You can download it on the App Store, on the Play Store for Android, on PC. You can also download it from their sites, metaquotes.com. Alright, so that is basically how the forex market works. Okay, but you don't only benefit when you buy. Just like every other commodity you see, if you buy oil for a cheaper price and you sell it for a higher price, you make profit. But nobody thinks of the reverse. The reverse is this: if you sell oil for a higher price, you make money. So if you buy, if you buy and you sell it, if you buy it, you have to buy it cheaper so you can sell it more expensive. That's it. Buy cheap, sell expensive. That's the same thing in the forex market. But now, a simplified format is this: if you're buying Euro USD, you are buying it with a button. That's why you have the forex platform like MetaTrader 5. It helps you buy it with a button. So you click the buy, and your order is being transferred to the broker, and the broker sends your order, and everything, the amount of your orders, everything is just going to be there. Okay, so everything is going to be set. All right. So when you buy, if Euro USD goes up in value, you make money. If Euro USD doesn't go up and it goes down in value, you lose money. That's how it is. Now, if you are anticipating the price of Euro USD to drop, if you're anticipating the value of Euro USD to drop, you don't have to click buy, you have to click sell. Yes, if you're anticipating it to drop, you have to click sell. Sell is like, okay, I'm going to use a physical shoe business for example. You bought the shoe for 1,000 naira. You are buying that shoe for 1,000 naira because you know, let's assume you are into shoe business. You know, when you go to your place or to your shop, you sell it expensive. For the people in your area, they would buy it. And mostly because you know people in your area cannot come this far to get shoes, so you're going this far to get it very cheap, so that you can go to your area to sell it expensive. So you know it's going to go up in value. That's why you're buying it at maybe $1,000. Okay, good. So when you have this shoe in stock, and let's say you have not sold it for a long time, and then you hear a news that maybe next week, next 2 weeks, this shoe is going to drop in value, you find a way to sell it immediately so that you don't lose. So if you sell it immediately for that high price that you kept it, you make profits. You don't want to hold it, you want to sell it because you're anticipating that it's going to drop in the future. So therefore, you want to sell it fast while it's still high. That's the same thing in the forex market. So now let's think about it in the forex market. You are anticipating that Euro USD is going to drop in price, so you sell it fast. You make money. There's somebody somewhere that will buy it. If there's no somebody somewhere to buy it, the brokers themselves will buy it.
Going to be discussing about some very key elements in forex trading, and these elements you have to know them. Okay, it's very important because you wouldn't know so much in forex if you don't start with all of this. Okay, so the first on the list we have is lot size. Now, I'm going to use normal business terms to explain this. Okay, if I break it into the trading world, trading industry rather, to make it more simpler. Okay, so lot size is just quantity of goods you're buying on the market. Let's say you go to a shopping mall and you want to buy a detergent. Now, it's either you buy one sachet of the detergent or one roll of a detergent or one carton of a detergent. It's either you buy one sachet or one roll or one carton. So this I just mentioned are just quantities, but we are still talking about detergent. So in one roll, we have more than one detergent right together. In a carton, we have more than one rolls in that carton of detergent. So quantity. Now, in what quantity do you want to buy? Shows in what quantity you're willing to spend on purchasing it. Now, let's assume you are going out there to sell this detergent and you bought it for let's say um, you bought one sachet for $10, for instance, and then you need to sell it $15, right? In the place you're going to. So while you're taking it there, let's say you bought it for $10 and you're going to sell just one sachet in another place. The gain is just $5, right? Because it's $15 for selling it. But in a scenario where as you bought it $10 and you're going back, you now hear that price of this thing has fallen now. In this area, everybody sells it $5 now. And you already bought it for $10. So what's going to happen? You're going to lose $5 trying to sell that stuff off, right? So now let's assume in a scenario where you bought one roll of detergent. Buying one roll of detergent, if each is 10 naira and it's 10, that's how much? If each is $10 rather and it's 10, it's $100. And if each gains $5 and it's 10, the gain is also $50, right? So he's buying the roll for $100 and he's going to sell it $150. So what's his profit? $50. Now, is his profit not higher than the guy that just sold one sachet and his profit is just $5,000? Yes, his profit is higher, and that is the whole idea here. The whole idea here is actually the higher the quantity of what you're buying, the higher the profit you go to make outside. And the higher the quantity you're buying, if anything happens or if the price of that goods falls, the higher loss you will make. So somebody losing $5 for one sachet will lose $50 if he buys and sells one roll of detergent and the price has fallen by then. Now, that is what we mean by lot size. In Forex, we know we buy when we are anticipating a push-up in price. And then, what do we just buy? In what quantity? Even you trying to do normal physical money exchange, you have a quantity. How many dollars are you willing to change? How many naira are you going to change? How many pounds are you going to change? All this is quantity. How many? Amount. So in Forex, the way we call amount or quantity is known as lot size. Simple. So you're trading. You want to buy something because you anticipate that it will go high in future. How many amounts of how many units do you want to buy this thing? Now, if you buy it, remember I told you that if it goes up, you make profits. I remember I told you that if you buy it and it goes down, you make loss because you should buy means up move, bullish. You can hear the word bullish, buy, all of them mean up move, right? So in a scenario where you bought with a very heavy lot, I mean you bought a big amount of it, and then it went against you, your loss will be very big. And if you bought good amount of it, a good amount, right, and it went your way more, you make bigger money from the whole thing. So what I'm trying to say is lot size is more like quantity or something. So there's a phase I want you to understand. Lot size, we have three types or three categories of lot sizes. Micro lot, right? So here we go. So here we go. Standard lot, mini lot, micro lot. So here we go. So what's standard lot? What's mini lot? What's micro lot? So I'm going to use everyday examples to teach you what this is before we go into the forex industry. So standard lot is equivalent of you buying one carton of the detergent. Mini lot is equivalent of you just buying one roll. Micro lot is equivalent of you buying one sachet. So now you have understood the grade. Like standard lot is the highest lot, like the highest form. Mini lot is second to highest. Micro is the smallest. So if you buy 2 sachets of detergent, it means you still bought detergent in sachets, right? You bought it in sachets. If you bought 2 rolls of detergent, it means you bought it in rolls still. If you bought 2 cartons of detergent, it means you bought it in cartons. So in Forex, instead of 1 sachet, micro lots is written as 0. Micro lots is written as 0.0, and mini lots is written as 0.1, and standard lots is written as 1. So I just told you all their stuff, all their quantity in numbering figures and how they look when it's singular. So let's look at standard lots when it's 2. It's 2. 2 is a standard lot. 3 is a standard lot. 4. So these 2, it looks like you're buying 2 cartons of detergent. 3, like you're buying 3 cartons of detergent. 4, like you're buying. That's a heavy, as in the highest quantity of lot sizes to use. It graduates up to 100 million, 5 million. All of them are still called standard lots. So we have 0.01. The next is something like 2 sachets, something equivalent, 0.02, 0.03. Right, so how many lots as 0.2, 0.3. That's just all very easy, right, to understand. So let's go to the next one, PEEP, percentage in points. Okay. Percentage is points. This is actually how, or the distance price has moved. Okay, the distance price has moved over a certain period of time. It's calculated in percentage points. Percentage in points. So just like when we're taught in physics, what is the what do you call it? What is the unit for calculating distance, right? You know, for calculating distance as centimeters or meters. The unit for calculating weight as kilogram. The unit for calculating force as Newton. So the unit for calculating Forex, price has moved from here to here. Is it cm? How many centimeters has it moved? No. Or is it how many kilograms has it moved? No. We use PEEP like to mark the move or how price have moved from this like 100 DATs to 50 DATs, 100 DATs to 500 DATs. It's always calculated in PEEPs. Example, I'm going to draw something like a chart here so that you can see like this, like this, like this. So if they asked you, look at this long move. If they ask you, look at this long move, how far has price moved from here to here? How far has price moved? So you tell them how many pips it has moved, right? How many pips it has moved. And we're going to discuss more about this PEEP calculation, and you're going to see that more often as we trade. Okay, so equity. Okay, what is equity? It's actually your trading account, your balance you have in your trading account. Now, if you have a $500 in your trading account, when you place a trade, your $500 is still in your balance, but your equity has changed. Okay, what's your equity? The equity is how I call it, actually displays what you have in your balance and also the unrealistic loss or unrealized loss or unrealized profits that is still running on your trading position. Okay, so equity I don't want to go too deep into it, but as you grow, you understand what it is. We'll explain more about it. But for your stage now, all I can tell you that equity is more like a trading capital. Every business, you need a capital, right? Good. You need a capital, right? Every business, you need capital. Forex is a business and you need a capital to trade. So placing all those orders, the money you're using to place, that lot size you're using to place is actually what you're risking. That's why micro lot is the smallest lot, what you're risking. Okay, it's made mention of the detergent. You are just going, if you're buying one time, you can say your loss or your profit will be small. If you're buying one roll, your loss and profit will be a little bit big. If you're buying one carton, your loss and profit will be bigger. So same thing with Forex. The higher the risk as it means the higher the lot sizes, and then boom, you make money, make big money. All is depending on your account size, right? Your account size is what matters. Next is margin. Okay, margin is actually that particular amount it takes for us to place a trade. That particular amount it takes for us to place a trade. Let's say you cannot buy um, um, let's say you cannot buy an iPhone 13 if you do not have 800,000 naira, for instance. You're not buying an iPhone 13 if you don't have 800,000 naira. It means you need 800,000 naira before you purchase the iPhone 13. If there's no 800 naira, 800,000 naira on your card, on your account, when you want to pay for the phone, it's not your money, even if it's 799,000 is inside there, 710,000 is inside there. That transaction, that card will not bring out any money. The transaction will not work because you need up to 800,000 to purchase the phone. So in Forex, there is a specific amount that is needed to be in your account before your trade will open, right? And these amounts are very little, okay, very, very little. Some is 0.0 something dollars, some is $0.05, 0.03. Just depends on what lot size you're playing with. But using a higher lot size, it means you use a bigger margin or a bigger capital to stake it. That money at stake that they're allowing you to use to stake it is actually margin. Now it differs across so many brokers. And as time goes on, we'll talk about who brokers are, what they do, and all that shit. So what about leverage? Leverage actually, oh, my laptop is getting low. Leverage is actually your how much your broker had borrowed you to trade that's not your money, right? That's leverage. Back then, you cannot trade the forex market without if you're not one of those elites or banks or hedge funds, you cannot. We never had access to the trading, but because of the internet, we now have access to trading. And why we couldn't trade them? Because they were using large volume of dollars, billions, trillions of dollars to trade. You as an individual, do you have such money? So if you don't have such money, it would have been impossible for you to trade. So that's why brokers, which are companies that hold your trading money, we'll talk about them later, they actually provide what we call leverage, help you make it possible that you can trade from your little account and all that stuff. Okay, so that's about leverage, right? The money you borrow you, like the additional funds. Okay, so that's all for leverage. See you guys next video, right? Thank you for watching.